I find that the stories handed down from my father and late grandfather still deeply resonate with me, especially their experiences during times when interest rates surged under Reagan's presidency, and the Fed, steered by Paul Volcker, implemented drastic measures to curb rampant inflation. My grandfather, then a builder and developer, described the real estate market coming to a standstill, likening it to a tap suddenly turned off. Property values plummeted, falling below development costs, leaving investors with devaluing assets and escalating holding costs. This period saw a spike in financial maneuvering and bankruptcies, a stark reminder of the consequences of dramatic interest rate hikes. Historically, the lag between hefty spike in the interest rates and the realignment of real estate asset valuations has been roughly 20 months. Reflecting on a recent loan application, I am reminded of these lessons from the past. The applicant sought a $1 million loan while already deep in short-term debt and default. The project, past its completion deadline, needed additional funds, but the borrower's current lender was not willing to extend more credit or patience. Despite market conditions and rising interest rates, the borrower optimistically and unrealistically increased the projected sale price of the property by a third since his initial estimate. It was such an overestimation, aligned with the cautionary tales of the 80s. In this scenario, the borrower's scant equity and the inflated valuation of his property raised serious concerns about the viability of his project. It seems an act of desperation, as clear as daylight, and not something that can be obscured or justified by optimistic projections. When I left the site of the existing lender arriving with a contractor suggested he was preparing to mitigate his losses on what had become a non-performing asset. This is a potent reminder that loans based on shaky equity and optimistic valuations are fraught with risk. It's crucial to maintain a loan portfolio grounded in reality, not inflated by wishful thinking. Therefore, this loan application is one I had to prudently decline. This has been Nathaniel with Fulford Lending. Thank you for watching.